Welcome, everybody. We're here live at the America's Credit Unions GAC 2024. Been a great show, a lot of energy here. I'm here with Will from Rapid Finance. Welcome.
Thanks, it's good to be here.
Yeah. I'll let you introduce yourself and a little bit about what your company does.
Sure. I'm Will Tumulty. I'm the CEO at Rapid Finance. We provide capital to small businesses across the country. We also offer software service platforms to other enterprises that want to be able to bring capital solutions to their small business customers.
Yeah, and that's capital is key with small businesses.
Exactly, yes.
I know. So, yeah, how are you finding credit unions' interest in small business lending? Years ago, it was, they were very shy about it because of the risk involved, obviously, and other elements, having that right expertise. But that tide has changed. So talk a little bit about that, the sentiment. I want to say consumer sentiment, credit union sentiment around business lending, yeah.
Right, exactly. So, historically, credit unions have not been big providers of capital to small businesses. They've been very focused on their members, and there are some regulatory limitations that credit unions have. So understand where that is. I think more recently, we're finding that there are some credit unions that are exploring this as an opportunity, which I think is really a great fit with the credit union mission of serving their communities. So if you think about it, credit unions are really the financial heart of their communities through their members. But a lot of their members are small business owners. And so being able to bring capital solutions to those small business owners so that they can help grow their businesses within their communities seems like a perfect fit. Right.
And it's certainly an underserved community, which credit unions should be doing. The small businesses are often the heart of the communities that the credit unions are serving too. So it fits the mission all the way around. I've always wondered, what the holdup is. Obviously, expertise is a big thing. We've seen a lot of credit unions buying banks, often to buy that skill set or the knowledge and the technology. What are your thoughts on that? Is it a smart way to do it, or?
I think if you can buy a bank for the right price, it can be a good a good return on that investment.
Right.
But one of the things that we find is not all banks do a lot of small business lending, and if you think about your typical bank in their commercial lending portfolio, in many cases, the smallest loan they'll make might be $500,000 or $1 million, right? Because they're looking to put big chunks of capital to work at a time, and their business processes and their systems infrastructure are really geared around that. So there's a lot of things that are very manual, that are not terribly automated, but most of the small businesses really they don't need and they can't afford a $500,000 loan. They might need a loan of $50,000 or $100,000, which makes a lot more sense for them. But the acquisition cost associated with the commercial infrastructure that a bank might have for lending is just too expensive.
Right.
And so, having been a small business lender ourselves for more than a decade, we have built and use our own systems infrastructure to do a lot of automation, a lot of credit model driven underwriting, followed up with sort of manual reviews by our underwriting team where necessary.
Right.
And importantly, to speed up the process, because as you know, as a small business owner, right, when you're looking at your cash flow and some opportunity comes along and you want to be able to jump on it, it's like, okay, I don't have 6 weeks to go through a process with the bank or a credit union for this. It's like, I got to commit to this by Thursday and it's Monday. And so I got to know whether this capital is coming through by Wednesday so I can make a contractual commitment to a counterparty.
Right. And it's not only a great opportunity for that business, it's a great opportunity for the credit union or the lender. I would say any lender, but because that is a loan you may not have realized otherwise until this person had that urgent need. But then you can't fulfill it usually because it takes too much time.
Exactly, and it really can build a much stickier relationship with your customer. So it's like, okay, I'm a credit union. I have a credit union member who's been doing their personal banking with me for 10 or 15 years. They have a small business, Now I can do their business banking, I can bring them capital. The other nice thing about capital is it would be typical to say, okay, if you're going to get a loan, you need to have your business bank account with me.
Right.
And that builds your deposit base, right? That is typically larger, right? Companies, small businesses have more money in their bank accounts than consumers do typically. And those are relatively sticky deposits, right? And so it can help that side of the balance sheet as well.
Yeah, and right now, credit unions need the deposits, that's for sure.
Everybody needs the deposits. That's right, everybody needs the deposits.
So, I mean, as far as business lending right now, is it a good environment for credit unions to be entering the business?
So, it's such a broad market that there's never a bad time to do lending to small business as long as you're smart about it and as long as you enter a new market in a measured way as any responsible financial institution would.
Right.
We've seen we've seen many cycles over our time in business, and probably the worst time to get in would have been right before the pandemic, right? But we're not expecting another one of those.
No.
But delinquencies and write-offs, they ebb and flow largely with the broader U.S. economy. The economy has been pretty strong. I know everybody's worried about, is the recession coming later this year? But I think as long as you're focused on very solid, stable small businesses that have a loyal clientele, they've been in business for a number of years, and you are prudent with your underwriting, you can do just fine.
Yeah, and often, I mean, you were talking nationally, but there are pockets where things are going great. There are other pockets where it's not, but yeah, it really depends on that local community where the business is serving or whatever the product is or service is. And the demand, obviously.
Exactly. And there are cyclical things in industries, right? Sure. So we saw more delinquencies and write-offs over the past year in transportation, right? So freight. That whole industry was hit by some macroeconomic factors related to supply chains catching up and then being overstuffed in the warehouses, and so you don't need those trucks moving goods around. That is another thing based on our experience as a lender that we can help our credit union customers figure out, right? Particularly if you're new to small business lending, you're like, what should I worry about here? Right? How do I underwrite? Particularly if it's a business that's not heavy on assets, right? Because the underwriting there can be different. We do most of our underwriting based on business cash flow. Right, so we get the data that we need. Our system can automatically pull most of that together, and then we can figure out, okay, what is the stability of the cash flows? What's the level? Are they rising? Are they falling? And what kind of a loan could we do for a business?
Right, and I love that you guys are talking like $50,000 loan, because those landscapers who need to buy a truck or whatever it is, a piece of equipment or a restaurant, whatever.
Right.
Because those are the people that are, they're part of the community, and then as credit unions, they're supposed to be supporting the community, and so being able to give them, that small dollar loan for a business anyway, small dollar loan is great, because I guess the point was it was too expensive to do it, and which is why, they'd rather have one lender at $1 million or one borrower at $1 million versus 10 at 100,000. So
exactly, it's expensive and it's difficult to deploy capital, right? If you have a several $billion-dollar balance sheet, deploying that capital, $25,000 or $50,000 at a time, you got to do a lot of that. So you really need automations and a system infrastructure to do that efficiently.
Right. Talk a little bit about the automations. What are the time savings you're seeing within the credit union or lender, but also for the businesses? Like, how quickly are they able to get the applications turned around and that kind of stuff?
Yeah, so we use our own systems, right? So we eat our own dog food. We've been doing it for 10 years, and so that's really we took the stuff that we've developed internally, and we have commercialized various sub-elements of that. Really focused on the front end acquisition and origination portion of the lending value chain. On our internal program, so if we have a small business that's coming to us for a loan or a line of credit, Once we get a completed application, probably 80% of the applications that we can approve, they are approved and funded within 24 hours, right? So we can do it pretty quickly. The way we do that is we rely on our systems to do a bunch of automated data gathering for us.
Okay.
So we get the information about the business, right? So business name, address, EIN, right? Identifying information about the business, things about the business owners, right? Because you got to know about the business owners as well. And then we take that information. We have one system that is a data enhancement and aggregation platform. Takes that, shotguns that information out to a couple dozen different data validation vendors or enhancement vendors. It brings all that back. That usually takes less than a minute. And then we have rules that can look at all that enhanced information and say, okay, does it hang together? Does it look real? Right? Are there any red flags? Then on that particular system, we can compare all of that enhanced information to every other customer that we've ever seen, right? Because we load that information in there, and we say, okay, on applications that we saw 2 years ago, are there any matches on those data elements? Were they approved? Were they declined? Did we flag them for fraud? Right, and so you can basically do a lot of upfront screening and enhancement, so that by the time you have people getting into the loop, you're not spending a bunch of time on things that are just not going to go anywhere. From there, it moves to our loan origination system. And in that loan origination system, that's where we apply sort of the credit rules. The credit rules that would be based on business credit, business owner credit, cash flow of the business, and the machine will basically pull all that information in and give a preliminary assessment. That is then passed on to an underwriter who will then look over the file and say, okay, maybe we need some more information to validate some things, maybe they want to check some documentation, there might be other documentation that's needed, but all that can happen in a couple of hours, and a message can go back to the applicant really that same day and say, hey, we've got a preliminary approval. Here's the rest of the documentation we need. Here are the terms and the dollar amounts and the things like that. So if you're interested, click here and you can continue through the process.
Nice, very efficient and digital.
All digital.
All
That's
digital.
Right.
Which, that transformation has been accelerated, if you will, by COVID, obviously. So talk a little bit about that, how the technology push, because my understanding is credit unions are now like, okay, we know we need to do it. They are even maybe a little more apt to adapt the technology even than others. And I think in part it's because they're so member service focused. Talk a little bit about not only the evolution of the technology, but also like the evolution of the attitudes toward the technology.
Yeah. So we didn't start out as a technology company. We started out as a finance company, a lending company. But we did not find in the market from the big core systems providers and others the kinds of technology that we needed to quickly and efficiently and safely underwrite small businesses. And so, we've spent better than a decade building our own systems to do this. We really didn't have a huge intent to become a software company, but when the pandemic hit, we had an opportunity to support the SBA in one of their larger programs. We helped provide the technology for their economic injury disaster loan program. And that was a crazy time in terms of like trying to get it done quickly and like do all that front end origination and that kind of stuff. And it was rough, it was bumpy, but ultimately it worked. It was a super big lifeline for lots and lots of small businesses across the country. And so coming out of that, we said, hey, if we can help the SBA on a very, very compressed timeline, there are probably a lot of other financial institutions that have capital that they would like to help grow the small business economy. They just don't have the systems infrastructure or the process know how to do it.
Right.
And so really we've spent the last year and a half building that infrastructure, at least for the front end portion of it, so that we can have products that are available to help those institutions that are looking to get into that market.
Yeah, and about how many institutions are, what's the demand for small business lending? How many are already in it and then would like to make it more efficient?
Yeah,
basically?
so across sort of all segments, right, banks, credit unions, non-bank lenders, right? There's hundreds and hundreds. Credit unions are probably the most underrepresented, I think, just given their history. For us, in terms of our penetration into those markets, we're fairly new. We launched our first product maybe 6 or 8 months ago. So we have a couple customers. We have many more that we're talking to. And what I think a lot of them are looking for is speed, efficiency, data reliability, and digital first. Not only for their members, but also for their team members, so that the loan officer or the underwriter can be in a system where they're not dealing with paper, they're not pulling up a bunch of Excel spreadsheets and trying to look at things, and it's all sort of presented in a unified format where they can very quickly get to what they need to be able to make an effective decision.
Right. Instead of, I just pulling data. I forget what the stat is, but people spend something like 60% of their work time just searching for data. To do their jobs. It's nuts. So that sounds really efficient. So what would you advise a credit union that's looking to get into business lending or grow their business lending?
I would say first you've got to make a decision that you want to commit to it.
Sure.
And it's got to fit in with your overall strategy for growth and serving your members. And the second thing I would say is the big advantage. There are two big advantages in the lending value chain that credit unions would have. One is they already have customers. So if they can understand in their current member base how many of those members are small business owners, right? It's like, okay, there is the immediate opportunity for you to serve your members better and to grow your balance sheet. The other thing is that they have deposits. And so that means that they have the balance sheet capacity up to whatever their regulatory limitations are, to grow that. And then you can pretty quickly get to a back of the envelope sizing on whether this is a big enough opportunity for my credit union to really make sense. And am I going to serve a bunch of members? If I have a very small member base that are small business owners, there might be other priorities to serve your members better. If you have a reasonably sizable number of small business owners, it could make a lot more sense.
Alrighty. Well, I always give my guests the final word. Any parting thoughts for our audience?
Well, so what I'd say is I think going forward, I expect the credit unions will move more and more into serving small businesses. It totally makes sense from a credit union mission standpoint in terms of serving members in their communities, right? 60% of the U.S. economy is small businesses, and it's just too big for credit unions not to get involved in.
Absolutely. Well, thank you for your time. Appreciate it.
Great. Thanks very much. It was great to be here.